So what is a high mortgage interest rate for a home? It's kind of confusing with all the conflicting information out there and everything that we hear. Maybe you were visiting during the holidays and you heard your brother-in-law talk about how there's no way that he would buy a house unless the interest rates were under 5%. And maybe you talked to your dad or your grandfather, and they were telling you about how interest rates were 20% when they bought. Of course, that's when houses were like $1. Not really, but you know what I'm talking about. And at work, it's no better, right? You've got the lady who's always talking about how she's got a 2% mortgage rate. She's never going to sell until she has her property paid off because it's such a good rate. And then there's the guy at the office who's telling you that rates are about to plummet, the housing market's going to crash, and he knows everything because he's never bought a house and probably still lives in his mom's basement. I know every office has one of those guys. You know who I'm talking about. Anyway, let's get perspective on what is a good interest rate, what's high, what's low, and we'll take a look at a short time perspective and a much longer term perspective. Start out looking at about 10 years. And so you see in this slide, this is monthly mortgage rates at the top. And at the bottom, you see we're looking at the average 30-year fixed rate mortgage. And so we'll be looking kind of at the same kind of mortgage to keep things in perspective. And so that's what the orange line represents. Our time frame starts in about January 2016 on the far left. And you can see on the far right, October 2025, so when our last data point is. And as we look across that, we see some lows. So we see a low here, December 2020, 2.68. Looks like the high is October 2023, 7.62. That's almost 5 points or 5 interest rate points difference, right? That's quite a big gap in just a few years there. Now, there's some different things going on during this time frame, and let's kind of look at those that might have an impact on what rates are. So the first obvious thing looking at this 10-year period is we've got 2 different presidential administrations, and that's not a political point by any stretch of the imagination. That's just a reality. The big thing we have is what happened in March 2020, around this time frame here in the center. And rates are dropping and continuing to drop, and then reach their lowest. That's COVID, right? We know that a lot of different governmental levers were being pulled in both administrations, and those things impacted our spending and especially the housing market. Now, rates were really low, but a different story on that is prices started to skyrocket, right? And then that's where rates end up increasing here, and then are staying high because the government's pulling those levers to try to get inflation under control. So just some different things we see here, but let's take a snapshot look at what's today look like. So this is early January, so it's just a few months after our last data point in this slide. So January 2026, that same rate we're looking at, that 30-year fixed, it's 6.2% average. You could be lower, you could be higher, just depending on a lot of different factors in your finances, but it's about the same as we saw in October 2025, just a few months later. Now, there are some that you see some lower prices on. The one just to the right of that in the center there is 5.75%. That's for 15-year fixed rate. So in general, if you're going to take a shorter loan, your payment's going to end up being a little higher, but they're happy to give you a better rate for that. So that's one data point that we're seeing. Just below that, you see the 30-year FHA, Federal Housing Administration, 5.85, also lower than the 6.2, even though it's the same time frame. And that's more geared towards specific type of buyer. To the right of that, you see the 30-year VA Veterans Administration. And so for those veterans who qualify for those benefits, they can get an average loan rate of 5.87% today. Now let's go back and look at an even broader time frame. And so first thing I'll point out is back up at the top, these mortgage rates, we're looking at annual. So each data point is not monthly, it's going to be on an annual basis. You'll also notice, and my fat head's kind of covering it up, but it goes back to 1972. So you see right before the 75, about 3 years before that's 1972, goes all the way to projecting out the year 2025. The time this slide was taken, it wasn't quite finished with 2025. Now, what do we have in here? We've got some, back in 1981, a huge 16.63. So maybe that's where your dad or grandfather got their 18-20% rate. So it's not too far off of that. That would be a possibility in that time frame. We're looking at the average in 2025 being 6.7. We're looking at it just at the end being 6.25, but starting back in those sevens. So that kind of makes good sense for a projection. Now, the previous slide we looked at was a 10-year time frame. If we took, say, 1978 here towards the left-hand side, and then we went to 1988 or so, and all these high ones in the middle, so that's a completely different 10-year snapshot. We might still have, you know, a 8-9 point difference, but our average is going to be much higher in that 10-year time frame. And so people looking at that 10-year snapshot back then, they would think that anything below 10 is probably pretty good, right? Because they were paying 16%. I'm going to draw your attention to two other lines. This, what I'll call green, and it says 6%. This is looking at over 30 years. So look at the bottom. It's 1990 to 2023. It's about 33 years there. The average was 6%. And then when we look longer, over a 50 year, 72 to 25, or to 23, we're looking at 7.72. So a long-term average. So all of a sudden our 6.2 of today looks like a pretty decent average, but we're only looking at the 10-year time frame. It's not looking quite as good. So it really is all about perspective, right? So we already took a look at that 16.63 high back in 81, but it looks like over on the far right, 2021 is where we had our low. Remember, that's where it was about 2.6-ish around that time frame in the 10-year slide, even though they don't show the number here. So that's a difference of almost 14 points. So it really is all about perspective. So what is a good rate? So the reality is that we don't have a magic ball. I've been involved in real estate for over 15 years, and my belief is that you ought to buy when you're ready and you're able. And the interest rate is really just a secondary condition based on that. Since we don't have that magic ball, we don't know if rates are going to go way up, going to go way down, or stay relatively steady across time. If you're ready and able today and you buy, the worst case scenario is you get locked in at that average rate. So 6.2 is not sounding too bad historically if you get locked into that range. However, what do you do if rates go down? You can actually refinance a loan, and it'll depend on how much the rate drops and how much it costs for you to refinance, but you could definitely save money in the future. Now, what you'll have locked in is the price that you paid for your home, and that's a whole nother issue, seeing how the home prices have escalated over time. And so the next thing, if you think, well, maybe I should look a little closer at buying, but your next challenge will be kind of looking at the home buying process, and it can get kind of complicated. So check out this video we shared with you about simplifying the process.